Okay, on finance.google.com, which redirects to www.google.com/finance. Anyway, over on this section of Google, they give you business-related headlines, and what it shows is the gross domestic product is sluggish. It's slow, like 0.7%. It's not in negative territory yet. We're not in a recession yet, but it's instead of getting better, it's getting worse. It's moving toward recession. The economy is most likely moving toward recession. And at the same time, you look at the different large giant corporations' income, and they're actually doing pretty good, even though the economy is just barely chugging along. The large corporations are actually doing pretty good. And that's kind of a contradiction. And you look around, I don't know about your particular community, but in this community, there are, I think there's at least 3 new houses going up on the road where I live. A property that's right next to ours, it recently sold. And I mean, that guy, when he bought it, he originally was a flipper. I mean, he owned several properties, and part of where he derives his income was flipping properties. And he bought that property before the 2008 crisis, and so he's had difficulty, selling it. But he finally sold it. I don't know what kind of price he actually got on it when he finally sold it. I really don't know what the price was, whether he got what he wanted for it or not. But the property sold. So, I mean, there are signs the economy is doing good, but you kind of feel like we may be moving back toward 2008 because this real estate boom, is it based on a solid foundation, or is it simply based on the banksters and the government contriving to push real estate values up to create a bubble again, just like it was in 2008? Is the real estate market real, or is it artificial? To what degree is it the creation of the government, and at what point will the government pull the rug out from under it? I don't know. I mean, it may be real. I really just don't know. But there is something that kind of feels like we're moving toward 2008 again. I hope I'm wrong. Anyway, the reason I came over to the finance.google.com really didn't have anything to do with the economy per se, although I did want to talk about it a little bit. I can't say this is the way it's going to be, this is the way it is, because I'm really just not sure. I can say that there's a contradiction in the economy. The GDP is growing really slow, but corporations are making pretty good money. Like, okay, let me go back before I move off the subject. ExxonMobil beats expectations as profits more than double from last year. ExxonMobil's profits doubled from last year. Amazon's doing good. Google's doing good. I can pull up on some of the lesser known stocks that I follow, and they're not doing as well. But the companies that you see in the spotlight, they are definitely doing good. Okay, the reason I came over to finance.google.com is I wanted to show the portfolios. I have some portfolios set up. I wanted to underline, you look at some stocks, the economy is doing good. You look at some stocks, the economy is doing good. Well, the name of this video is the Tele2 portfolios, and I have different stocks in those portfolios. I wanted to show you the difference between those two portfolios. Okay. And I have a real slow DSL, so you know how that goes. Okay, this is my portfolio that's not doing good. It includes Pfizer, General Motors, Ford, SunTrust, E-Trade, TD Ameritrade. Okay, you go down and you want to see the last between March 20th and April 27th, what this portfolio has done. Okay. It it has lost. If I had invested $10,000 in these stocks at the beginning of the 30 days, I would have lost 3.36% of my investment. I would have lost $399.22. That's how much I would have lost off this particular portfolio. Now here is a different portfolio. In this portfolio, I include Alphabet, I include Amazon, I include Super Value. That's a grocery company. They're moving more toward wholesale. They operate in several. They've been struggling, but I put them in this portfolio. Zynga, I put them in this portfolio. There again, they've been struggling. Facebook, I put in this portfolio. Twitter, I put in this portfolio. And Six Flags Entertainment, I put in this portfolio. Now, you know how bad the other portfolio stocks did. I showed you that. Do you want to guess what this portfolio of stocks is doing? You want to guess? I'm going to show you. If I'd invested $10,000 in this portfolio stock, I would have made $801.64. On $10,000, I would have increased my investment 7.4% if I had invested in this portfolio of stocks. Now you see, you look at one group of stocks, it's losing about $400. You look at this portfolio of stocks, it's gaining $801. It's a tale of two different portfolios. Okay, and there again, you go back to the economic news on how the economy is growing. It's growing very slowly. And yet, there are certain corporations that are doing excellent, are doing very well. And of course, and the media tries to spotlight those corporations. But you look at another group of corporations, you can see where that sluggish growth is coming from. You look at that group of corporations, and you can see, well, okay, the economy's really not doing that good. You can look at the real estate market, and you say, okay, it's doing good. But is it real or is it artificial? Because we know that for the last 8 years, the government's main economic goal, ambition, has been to take the real estate crash that happened in 2008 and reinflate all those prices so that the banks would be back in the money on the real estate that they were still holding in reserve. And contrary to what you might hear in the media, there is still a good bit of real estate being held back off the market that is still being held in reserve. Now, you don't see that in the real estate stats, and I can't show you exactly to prove it, but I know before the 2008 crash, and we were looking at different foreclosed property, and we can see the foreclosure levels increasing and rising. And I think right now the foreclosures are actually fairly stable to low. So that's a sign the real estate market does have a foundation, because that's one way you can gauge what the real estate market's doing, is looking at the foreclosures. If foreclosures are going up, there's a problem developing. And I don't see that, but when I've looked at the stats, I don't see that as a problem. But I don't know the degree that those stats are real. I don't know the degree that real estate's actually being held back off the market and being kept out of those stats. This is a chart of housing prices from 1890 to 2014. As you can see in this chart, you can see how housing prices greatly shot up right before they crashed in 2006, before the economic crisis of 2008. This chart shows you housing prices from April 2016 or thereabouts to around the current time period, in 2017. I'm really not sure what month the chart ends in, but it shows you how prices have gone from April of 2016 to beyond January of 2017. This is a chart of housing prices before 1995 to beyond 2015. Gives you an idea of what housing prices might do. and what they might indicate. The average prices of single-family houses with mortgages guaranteed by Fannie Mae and Freddie Mac in the United States increased 0.8% in February of 2017 over the previous month, following an upwardly revised 0.2% rise in January. So, housing is definitely going up. Is it going up too much? Going up just the right amount? Is it a bubble developing? Some of the prices probably don't even approach what they were in 2006 before the crash. Some mortgages might still be underwater in this economy. But, if the economy couldn't support high housing prices in 2006, has the economy really improved enough so that the economy supports, rising housing prices in 2017? I don't know. I'm not sure. So in conclusion, the question is, do the signs point to a booming economy in the future in which you can make money by investing? Or are all the signals in place that we're about to skid into a new recession with perhaps housing prices dropping, stock values dropping, and people running around screaming, "Ah!" I don't know. The signals are mixed. They're definitely mixed. I wish I could tell you definitively, now's the time to get all gung-ho, with Trump's election, and everything's going to be beautiful down the road. Everything's wonderful. Now's the time you can make lots of money with sound investments. I'm not sure. My inclination is, I tend to see more caution flags than green lights to go barreling ahead. I don't know. Anyway, thanks for listening. This has been the Mighty Money Chuck Show.